Welcome back to your monthly real estate market update with Prize Capital Real Estate. I'm Jason Prize, founder of Prize Capital Investment Research. As always, we're here to cut through the noise, break down the numbers, and give you a clear, data-driven look at what's really happening in the Myrtle Beach housing market. Let's jump in. This summer marks a pivotal shift in the housing market, and we're seeing three major trends shaping the season ahead. First, inventory is expanding. There are now 39.9% more homes for sale than at this time last year. Not a dramatic surge, but a steady climb that's happening in nearly every market across the country. Second, home prices are flat to slightly down compared to 2024. That's a sign that supply has finally reached a point where prices are vulnerable, especially if buyer demand softens further. In much of Myrtle Beach, prices are sensitive, and even small changes in buyer sentiment could push them lower. And third, here's the twist. Despite the soft demand, we're likely to see home sales exceed last year's levels for both May and June. For years, the story was sales are down, but prices are up. Now the narrative is shifting to sales are up, but prices are softening. So what does it mean for you? Whether you're a buyer waiting for the right moment or a seller trying to price your home competitively, it's critical to watch these trends closely. Let's take a look at this week's numbers and see how the market's evolving. We're now up to 1,087 unsold single-family homes on the market here in Myrtle Beach. That's a 2.5% increase over last week and nearly 40% more inventory than this same time last year. It's a clear sign that we're heading back toward pre-pandemic levels, and fast. Now, let's put that in perspective. This is still fewer homes on the market than what we saw through most of the last decade, but we're closing in on inventory levels we last saw in early 2019. And while some areas of Horry County still have pretty tight inventory, the broader trend, especially across the Sunbelt, is unmistakable. Unsold inventory is building. What does that mean? It suggests we're going to see continued inventory growth through the summer and into Q4. Based on current trends, we could be looking at 1,200 or more single-family homes on the market by the end of the year, even higher if mortgage rates keep rising, as they have recently. Take a look at the chart here. We've mapped inventory trends going back to 2019, and it's easy to see the correlation. As mortgage rates climbed over the last 3 years, so did inventory. In the past, inventory typically peaked in August. But post-pandemic, that peak has shifted later, into October or even November. That's the path we're tracking again this year. Bottom line, this is a critical development for both buyers and sellers. More homes on the market means more selection for buyers, but it also means sellers need to price competitively to stand out. Now let's talk about the other half of the supply story, new listings hitting the market. This week, we tracked 78 new single-family listings that remained unsold, plus another 88 listings that went into immediate contract, for a total of 166 new listings in the Myrtle Beach area. That's 6.1% more sellers than this same week last year and a 2.9% bump over just last week. So yes, we're seeing more sellers step forward. And that makes sense. May and June are the peak months for new listings in a typical real estate year. Right now, we're sitting at the seasonal high point for 2025. So, if you're one of those folks waiting for a wave of panic sellers to drive home prices down, well, it looks like you might be waiting until next year. Now, if you look at this chart, you'll see the teal line represents this year. Based on current trends, I expect next week will bring the highest number of new listings we'll see all year. We'll likely get a few more strong weeks here in June now that Memorial Day has passed, but listing volume tends to taper off once we hit the July 4th holiday. What's important to note is that we are seeing more sellers than in 2024, but this is normal, seasonal growth, not a surge. There's no panic selling, no flood of inventory. In 2022, when the market was in real trouble, we saw listing volume keep climbing well into July. That's not what we're seeing now. One more point. The condo market tells a slightly different story. While single-family listings are up 6.1% year over year, condo listings are actually down about 3.3% from this time last year. This week we had 88 newly listed condos still available, right in line with 2024's numbers. So while inventory is rising steadily, the pace is healthy, and there's no sign of a flood coming. Let's take a look at the weekly pending home sales numbers, and this is something I've been forecasting for a while now. We're starting to see year-over-year growth in weekly pending home sales, and it's finally showing up in the data. Now, let's be clear. This growth isn't happening because demand is suddenly strong. It's more about how weak things were this time last year. In this same week in 2024, we only saw 626 new single-family home contracts. This year, that number ticked up to 646 contracts, which gives us a 3.2% year-over-year increase. So, get ready to start hearing media headlines report home sales growth for May, even though April's numbers still came in weak. The narrative is about to shift, but it's important to know why. It's not that the market is roaring back, It's that last year's baseline was so low. Now, if we zoom out and look at the full picture, we're still behind last year's pace year to date. Through the first 22 weeks of the year, we've had fewer total home sales than in 2024. You can see this in the chart. The black line for 2025 has been trailing the gold line from 2024 for most of the year. But here's the thing. This week's data breaks above last year's number by 3.2%, and if you look ahead at the easy comparisons coming in the next few weeks, I'm confident we'll continue to see that black line stay above 2024's pace for at least the next couple of months. Bottom line, home sales are starting to report growth over last year, not because demand is booming, but because 2024 was such a slow year. Expect that trend to continue. I keep asking myself, what's the right way to talk about home prices in 2025? Is the headline that prices are down from last year, or is it more accurate to say they're basically unchanged? Right now, the median price of weekly pending single-family home sales in Myrtle Beach is $439,900. That's just a slight dip from last week and about 1.2% lower than this time last year. So technically, yes, it's down. But the reality is, home prices are flat. This is true nationally too. Over the last couple of weeks, pending prices have been right around the same level as 2024. This week dipped a bit, but we're still in that tight range. Now keep in mind, seasonally, this is usually the time of year when we hit the peak in home prices. Somewhere in May or early June, prices tend to top out before starting their slow slide into the second half of the year. In 2022, mortgage rates were rising fast, so the peak came early. In 2023, rates were coming down, so prices peaked in early July. Last year, rates spiked in May and prices peaked around then. This year, mortgage rates are inching higher, and that's keeping a lid on buyer demand. So we're likely seeing our peak right now, probably somewhere around $445,000. I actually ran a Twitter poll recently asking people what they expect from home prices this year. And sure enough, there's still a crowd out there predicting a crash. But let me tell you, that's not what the data shows. Yes, home prices are down ever so slightly, but let's be honest, they're sticky. Sellers aren't slashing prices. There's more supply, but demand is still decent. And unless we get some major economic shock, a real crash just doesn't seem likely. So could we end 2025 with prices slightly below 2024? Sure, but we're talking a couple of percent, not some dramatic collapse. Now let's reinforce that forecast by taking a look at the price reductions. Price cuts are back on the rise, a clear signal that while home sales may keep ticking up, home prices are not. The reason is simple. Supply is growing, especially across much of Myrtle Beach, but demand just isn't keeping pace. Right now, 48.9% of single-family homes on the market have taken a price cut. That's essentially flat from last week, but still very elevated. This is typical for this point in the season. We're in June, so many of these are homes listed back in March that haven't had any offers. And now, with more competition on the market, sellers are adjusting prices to stay competitive and attract attention. At this current pace, we'll see over 50% of homes with price cuts by mid-June. That makes it clear. Home prices are not climbing from here unless something changes fast. Could that change? Yes, if mortgage rates dip noticeably. That's exactly what happened last September. You can see the impact in the gold line from 2024 in this chart. When rates dropped, demand spiked, and price cuts leveled off. But so far in 2025, it's been a disappointment for homebuyers. Mortgage rates have remained stubbornly high, and the relief everyone hoped for hasn't arrived. If the economy shifts and we get a break, say 30-year fixed mortgage rates dip closer to 6%, then we'll see that pent-up demand jump back into the market. That would stabilize price reductions and potentially lead to slight appreciation by the end of the year. But here's the key takeaway from the last 3 years. Don't bet on rates falling. You can't base your housing strategy on hope. You've got to go with what the data is showing right now. And that's the big lesson this month. Don't let your story dictate the data. Let the data tell the story. Thanks for watching this month's market update. If you're trying to make sense of this ever-evolving real estate landscape, we're here to help. Reach out to us directly or visit our office right here in Myrtle Beach, South Carolina. At Prize Capital Real Estate, we specialize in cutting through the noise to give you what really matters: real data, real insights, and real guidance. Want to stay ahead of the market? Sign up for your free Prize Capital Real Estate research account at prizecapitalrealestate.com. You'll get weekly, hyperlocal market data with expert insights tailored to your neighborhood, whether you're buying, selling, or advising clients. Thanks again for tuning in, and we'll see you next time.